बाहर इस मैडम खड़े रह के ना। हाँ, चेयर हटा दीजिए सर।
Hello, good evening, everyone. Am I audible?
Yes, sir, audible. Good evening.
Okay, good evening, good evening. Today we are going to discuss about setup. What is minimum requirement if you want to be an investor or a trader, or if somebody wants to be a day trader? Which type of laptop, which type of screen, which type of desktop is essential? We'll discuss that, and we'll discuss about bar replay mode, how to practice, how to do sessions replay, or how to do back testing reports, how to check whether the strategy is really useful or not. So does anyone have any questions? We'll start in 3 minutes. Any questions?
No, sir, I think everybody is keen to listen to you.
Yes, so 1 more minute and we'll start. So is my screen visible?
Yes, sir, it is visible.
Okay. My keyboard is not working for desktop. Just a minute. Okay. So first, we'll discuss about the setup. Okay. So uh, everyone who is interested in analysis, technical analysis, most of the time what I have seen is people just check the charts on mobile and they take decisions. They share the charts of mobile. It's a small chart. They decide some patterns. They identify those patterns and just share that chart. So what do they see basically is very small part of the chart. It's kind of this much a chart is visible, and on this they mark something like this. This is a flag and pole kind of pattern, and they plan trades based on this. So I feel that this is a really bad analysis because we don't know what is the background. These candles are least important candles. Latest 4 5 candles, they are least important candles. What I prefer is reset the chart like this. So candles should be clearly visible. It should not be like this, that candles are not visible and it's just a small ant like thing which is not clear. It's blurred, and it should not be too zoomed out like this. Only few candles are visible and we are not able to see much information. So basically I keep it like this so that adequate candles are also visible and we can get good information what is happening. And this left side is more important than only this right side. So what has happened in the past, how many times it has given entries, what is actually happening, when was the last downtrend, after which how many candles have gone up, is there any base formation. So where are we in the market? Is this first base or second base, or already 4 5 bases have happened and now it's too late? So this kind of information is possible only when we check the charts like this. Okay, so this is very important. So first thing, always use laptop or a desktop for analysis. Never ever use a mobile for analysis, especially when it is new analysis, fresh analysis. Don't take any trade decisions based on mobile charts. You can only take decisions about managing the ongoing trade. So you have done your analysis on mobile, on laptop or desktop. You have taken entry. Suppose you got good entry somewhere here, and you are just now following the trend, and there is a uh, swing low here and you want to trail the stop loss. So you can manage that much thing after taking the trade on mobile. Don't make initial first decision on mobile. All decisions should be based on laptop chart so that you know what is background condition, how the stock is moving now, and what is your expectation from the chart. This is very, very important. And for investors, laptop is fine. At least 14 15 inch, that is minimum requirement. So that you get a good view. And if you are a trader who is looking for more number of trades and slightly more active thing like working on hourly charts or 15-minute charts, then they can use two screens. So one will be for those which are active trades, ongoing trades, and the other screen will be for analysis. So that can be maybe you can use mobile and write the levels or place alerts and manage the trades using those levels. And a second screen should be used for analysis, proper analysis. Yes, so we'll discuss about stop loss also. And then if you are a intraday trader who is taking trades in sorry. So if you are intraday trader who is taking trades for same day exit or exit within few minutes or maybe less than 1 hour trade, then in that case you need maximum number of screens. So maximum number of screens means you can use at least two, that is minimum, but 3 or 4 screens are also required. And it makes your analysis better because at a time you have to check multiple things. You cannot rely on just one thing and take trade. So when I take intraday trades, I use 2 or 3 screens. I'll show you. Just a minute, I will have to hide the background because uh, virtual backgrounds none. Yes. Can you see this now? This is the screen which I use.
Sir,
These
actually,
are 34
can you
inch.
stop the screen because we are seeing the chart on the screen.
Okay, just a minute. I think if it's in your hand, you can check it.
Okay.
If you click on the view and go to speaker,
Yeah.
then it will show my chart. Then just my camera will be visible there. And what I will do is I will stop sharing the screen. I think I have already stopped sharing. Okay, is this visible? The
Yeah,
camera?
we can make out that. I think you have got two screens.
Yes, there are 2 monitors here and one laptop.
Yeah.
And there is one more.
Huh.
So sometimes I use 4. But when you are taking intraday trades like 1 minute, 3 minute, 5 minute charts, then you need this kind of setup.
Huh.
Okay. But if you are an investor, then just the laptop is also fine. But not the mobile.
Can you suggest some setup for one monitor only?
Yes, so you can use laptop, that is fine. If you are taking trades for swing positional trades or taking daily chart analysis based trades, then a laptop is also fine.
It's a intraday split screens maybe helpful.
Intraday, then you need bigger screen. That will be around 34 inches is my preferred screen, and at least one big screen and one laptop. That will be essential. Because if you are taking intraday trades, either you will be trading in options or you will be trading in futures. You need to check spot and you will also have to check something else. What I do is I use 15-minute chart on one screen and 15, 5 and 3 on one screen, and I use 1 minute on another. Monitor size, I will share this. This is 34-inch monitor. So I use 2 34-inch monitors, or else you can use 27-inch monitor also. That is also good.
So how do you adjust 15, 5 and 3 on one screen?
So I will share the chart. Can you see this? I have opened this window on the right side.
Yes, sir.
Yes, is this visible? And I
Yes.
use this.
Okay.
So this way, I use 15-minute on larger one, 5 minute here, and 3 minute here.
Okay.
So this way, I keep my chart. So this 15-inch, 15-minute screen, this is as good as a laptop screen. Slightly bigger than that. This 5 minute and 3 minute, they are slightly bigger than my 12.7-inch iPad. So this is like using 3 screens, 3 different screens of 3 laptops.
And for intraday, you don't use higher than 15 minutes chart, 75 or more than that.
No, it's not useful. I use 15.5.3. Take the direction of 15-minute and take a trade with 1 or 3 minute chart.
Okay.
Okay, and I will show you something very interesting also later on after the course finishes. I have developed some useful indicators for Nifty level identification. So can this be set as a setting in free version? Free version, I think in free version, what best you can do is you can use different charts. Different charts means uh, you can use your broker's chart, and broker's chart will give you this kind of setup, but trading view will not give you this kind of setup. But if you are taking intraday trades and if you are serious in this, then you have to take paid subscriptions. That is much better, because there are a lot of things which are there in paid subscription and which are useful for intraday traders who are taking more number of trades, highly leveraged trades. So these kind of people, they need it. It's not essential for everyone. Okay. So this is one thing. And if you are investor, then you can use weekly chart. You can analyze only on weekends. And if you are swing trader, you can use daily charts. Check at end of the day. At that time, it's not necessary to have multiple screens, because you can analyze with comfort. You don't have to make quick decisions. You can make the decision. You can take your time, and it's not necessary to make a quick decision within a minute and take the entry. Intraday traders need that kind of thing, and therefore they need multiple monitors. Okay, so this is about setting up the screen. Now, how to set the chart, we'll come to that. So as I explained, I use this. If it is zoomed out too much, then just click here. This at the bottom, do you see this half circle? Just click there, or there is Alt plus R. If you press that, it will reset the chart. So this is one thing. And when we add indicator, sometimes what happens, chart is like this. I have seen some people using this kind of chart. Let me add some more zones here. And sometimes what happens is, in the setting, something like this happens. Okay, you will be able to see this. I have set it to 50-50, therefore it's like this. If I set it to 5 and 5, and if I use a daily chart, see, something like this happens. The chart is at the top, and there is lot of white space available which is not used. Somebody had shared a chart like this with me. So if you are getting something like this, then this needs to be fixed. And how to fix this? Just click here. If you see here, there is a settings hexagon here. Click on that hexagon. This settings will open. And in these settings, what we have to do is scale price chart only. So when we select this, then the chart will get filled with candles instead of getting filled with something else. So always use this setting, scale price chart only. Okay, this is very important. Click on the settings and scale price chart only. This is very important. And you can also have time left for bar closure here. Lock price to bar ratio, I don't need this. And I use log scale. Always, I use a log scale always. This is especially useful when we are checking chart like this, which has lot of data from the past. And if I use non-log scale, what happens? These candles become very small and these become very large. So if I use log scale, everything is uniform. If I hide the indicators and make the chart a weekly chart, see how it is looking. It is looking fine. We can see the patterns. We can see the chart is moving up and down. But if I use non-log scale, we cannot imagine anything. It looks like there is just a horizontal price action here, then there was a breakout, and then prices went into frenzy. So people will feel that this is very small move and this is very big move, but actually something else is true. This is very rapid move, this is very rapid move, and these are very small moves. So this is the change with log scale. So always use a log scale, especially investors who are checking weekly chart or higher time frame charts and checking data of many months or many years. Then this is the thing. I have opened TradingView account. How do I add indicators which I have given access to? So you can click here, click on this and go to invite only section. So when you go to invite only section, you will be able to see that there are many indicators, means whichever you have got through access. There will be 5 or 6 indicators available here. All these are my own personally developed indicators, therefore there are so many. But you will see 4 to 5 indicators here, and you can add from that. So whichever indicator you want, just click on that indicator, it will come to the chart. And free version allows only 2 indicators at a time. Therefore, if there are any indicators already present on the chart, just bring your cursor on that indicator name and click here, remove. So just remove that indicator and then add. Otherwise, it will not be visible. It will show some error that it's not possible to add. Sometimes what happens is it will show error that there is a error because of access error. There is access error. So in that case, just remove it and refresh your window by pressing F5 or refresh button, and then again add that indicator back. If it is visible in invite only section and your subscription is still valid, then it will add, then it will show on the chart. If it has expired, then the error will persist. Okay. Now there is one more thing, that if you see here, Nifty 50 index, if I check 5-minute chart, Nifty is right now offline. If I check some other chart like Nasdaq, so NQ, do you see green circle? This green circle means market is open and data is live. But sometimes what happens, now Nifty, now there is some issue and it shows uh, red color here and D is written in front of that. So if you see red color here and D is written here, if you bring your cursor here, it will show that data is delayed 15 minutes, 10 minutes. There is a delay of 10-15 minutes. When you click on that and go to show more, it will take you to settings and you have to go through those settings, or they will ask for some confirmations that you are not a professional trader, you are just a non-professional trader. You have to submit that, and then you will get live data for Nifty and NSE stocks and everything. But if you have not if you are getting that error of D, you have to complete that process. Sometimes it's not possible to complete that process from here. It will keep showing, it will tell you to buy the data. We have tried this today in some account, so it was not possible to do that. So in that case, what you have to do is go to price action, go to this. Okay, there is this green color at the left corner, click there and then go to app settings, or yeah, here, go here in settings and billings. Once you go to settings and billings, this will come. In this, you have to go to subscriber status. Okay, here in the settings there is subscriber status. When you click on subscriber status, then update this. So once you update this, non-professional has to be selected, keep current status. So you will get something like this, and you will be able to use Nifty and NSE data live. So if anybody is facing this error because of the current recent changes in exchange policies, then you have to just update this, or go to your chart and click on the D. It will bring it will bring you to those settings from where you can change and make appropriate settings, select appropriate setting. Okay.
Sir, I have noticed that the BSE charts always show a D. So,
Yes, so BSE will always show D, and you have to purchase the data. It will never become green or live data. I
okay.
have purchased BSE data recently, therefore it is not showing D. And if you
Hmm.
and the markets are also offline, so it will not show now. But BSE chart, intraday chart is usually not visible. If you are using non-subscribed data, it will come only when you subscribe to this data. Okay, that is because of BSE's policy. It has nothing to do with TradingView. TradingView will give you all data live whenever it is free, and if exchange wants payment for that data, then they will ask for payment. And for investors, basic indicators are means basic subscription is fine. You can use 2 indicators at a time. That is good enough, and you can do the analysis based on that. But more active traders, they may look for paid subscription if they are able to make more profits as compared to the subscription fees. So you can decide initially when you are just learning, just go for this free version, and later on, if you feel that you need it, then you can take the subscription. Okay, so this is about setting up the chart. Now I will tell you how to do bar replay study and backtesting. Can anyone tell me how you do your backtesting, or how do your study, or how you do analysis based on different strategies? Suppose you want to take a trade based on RSI, that RSI is more than 60, I will buy, and when it falls, then I will sell, something like that. Normally, what happens, I will tell. So people will add RSI. I think I have developed some. Is this my indicator or someone else's? I don't know. I'll check other one. Routine RSI indicator. So this is relative strength index or RSI. And then what do people do? They will study that it has gone down below this. At this time, I will buy. And when it went up, then I will sell. So they will check here. It's good. I will sell at the top. At that time, RSI was very high. Normally, this happens. How do we have to study? Then they will check different charts. So at this time, they will be biased that no, it's rising. I will not sell here. And then when they see the top, at that time they will say yes, I will sell here. So it is always a biased study. Okay, most of the time it is biased. They ignore some signals that yeah, this is not a good signal, I would not have taken. There is some RSI divergence, I would have taken it because there was a up move. So we get biased, but same thing happens somewhere else, and there is no up move or something did not work out. Then people feel that they would have not taken that trade. So this is also possible. Okay. So the best way to do that is, suppose you see that this is RSI divergence. Okay. So there is a lower low on RSI, and when price created lower low, RSI had higher low. And people will say that I would have bought in this candle. Now, how to identify that whether you can actually buy it or not? You can do bar replay study. So in bar replay, have you noticed from where I did the bar replay? It's here at the top. If you see create alert clock sign here, besides that there is this bar replay. So click on this and click on the candle from where you want to start the study. So suppose you want to study from here. So click here, okay, start new, and click on the candle. So bar replay will start from that. Now at this time you have to analyze and decide that this is the current day. Now suppose the markets are live. Will you buy in this candle or not? That is the actual bar replay study and actual live market analysis kind of simulation. So if you see prices are up and then sideways, and now you want to take some decision. Will you buy or sell? What will you do? Now let us see what happens. Price went ahead. It created a low again. Price went down. Now it is in oversold area. So will you buy because RSI is oversold or not? If that is your strategy, you will have to decide that I will buy in this candle, and then decide whatever is your stop loss accordingly. Okay. So that way you have to do the bar replay study and then check in next candle. So if you bought, price went up, you will be happy. Now again it did not move too much, and again it came down. Now it's coming down and created a new low. So if you buy here because it was oversold, now it has gone down. Now whether you will exit or not, you have to decide that when entry is taken, not when this candle is forming. Okay. So this way you have to study the bar replay analysis. But suppose your setup is that you will buy only when there is RSI divergence. Now when the RSI divergence will be confirmed, that you have to identify. This is making new low, RSI is slightly higher level. So where will you buy? Will you buy immediately here? Sometimes what happens, you buy, decide to buy here and it keeps falling, and then RSI falls down, goes below that. It will be visible only when you do bar replay study. Okay. So somewhere like here, if you notice here, price made a low and again a lower low. So here you had a lower low formation. My cursor is getting stuck. Just 1 minute, please. Happened to mouse. Okay. So RSI is making new low. Let me mark using this. Yes, so here what is happening is, first price made low and then it made a lower low. And when this lower low is made, at that time RSI divergence is here. So would you buy here? So will you buy at this location or when price goes above, when the RSI goes above the yellow line? If you buy at that time, that means it's buying at this location. If you bought here, there was slight up move and then price kept falling. So this will, you will come to know about these things only when you do bar replay study. Otherwise, what happens? We see this is a RSI divergence. This is a RSI divergence, and then prices went up. Here also prices went up. But you miss all those trades where RSI divergence happened, but price fell. It could not complete even the first target, and you don't know where was the entry. So all these types of trades will be missed because you get biased. You will check only those locations where it has worked well. And when you go to actual trading or actual investments, whenever these kind of trades fail, you get stuck in those trades because you don't know what to do in these kind of trades. Okay. So bar replay is very, very important. Now I will write the rules first, that I am going to study this and this thing. Suppose I am using TRT. Let me stop sharing from desktop. I will share from my laptop. Okay. Because it's, the cursor is getting hanged. Okay. Now, is my screen visible?
Yes, yes.
Yes, sir.
Is the chart visible?
Yes, yes.
I'm not able to see what is happening on the screen. Just give me a minute. Yes. So this is the chart, and this is free version chart. So what we have to do is, if you want to use bar replay on intraday time frame, then I think it will not be available on. Yes. So intraday will not be available on free version. You have to use paid version, but you can do bar replay study using daily chart. Okay. So first thing here, what you have to do is click on these settings. Okay. Then go to symbols and hide everything. Don't check the chart. So once you have hidden this, then what you have to do is remove or hide all the indicators. So from here, hide drawings, hide indicators, hide all. Click on hide all. And then go to a date, any random date from where you want to analyze. So if I want to study from November 2010, this is November 2010. And then select from here that I want to do bar replay from here. As you have hidden all the data, gone into past chart, you can also change the chart. Because of this, what happens? You don't know what has happened after this. Okay, this is totally blank chart. You don't know what has happened after this, what has happened in the past. Now bring all the candles back. So bring all candles back. And then if you want to add any indicator, you can add the indicator. If you don't want indicator, that is also fine. Just go with this bar replay. Now study the chart. What will you do? This is Nifty is at 6,200. Now somebody will say I will just buy and hold and it will go to 25,000. So because you know what has happened in this chart. If you want to avoid this kind of bias, just go to some chart which you are not used to. You don't know about the history of that chart, and then open this and do all the steps I have told. Just hide the chart first, then change the name like this. Hide the candles, then change the name. Maybe go to netweb. Okay. And then when you select netweb, a chart of netweb will open. Then click on go to here, and then go to that date. So this is the first bar here. Uh, you can open this chart and start new. This stock, this is new IPO stock, and there will be limited data. So you can start study from here. What will you do? Will you buy here or just wait, or whatever decision you want to make? So from here, you can do bar study. Click here and it will go one candle at a time. Now, as we are studying TRT, okay,
I'm going down.
What?
can you mute?
Outfits for Saya with Riya. So Riya is going to.
Yes. So from here, my indicators are not available on this because this is a new account which I don't use. So you can add. The purpose of showing these things is over. I will go to my original account now and I will show from that. Okay. Let me open my chart. Okay, so is my screen visible?
Yes, sir.
Yes. I have combined TRT plus bands, and when the TRT color is green, it will not show any selling signals on bands. If you see the band, there are many sell signals here. And because we have added TRT in this, all the sell signals have disappeared. This is very important. If the trend is up, then we should not get sell signals. When the trend is down, we should not get buy signals. Even if we skip those kind of trades, we can save a lot of money. Okay. So here we were checking daily chart of NetWeb. Now I will tell you why we have to hide the indicators. See, if I click here and hide the candles, symbol, hide body, border, wick. Do you see still everything is visible? Because there is an indicator. So when we hide indicator, then nothing is visible. And also remove the volume. Then change to any other stock instead of NetWeb. Maybe some other stock. Let's check Reliance. Okay. If you want to check Reliance, you can use this. Or else you maybe some other stock like Cochin Ship. Small cap. MRPL. Okay. MRPL. We'll go to MRPL and go to some date from the past before 2018. Okay, so this is last available date, and this is 2025. So instead of that, we should get some stock which is old one. So I will show this. Okay. Now let's check from this date. I don't know what had happened in 2018 in this. Is this intraday chart? Yes, intraday chart. That's why the dates are not changing. So let's check MRPL again. 2018. Yes. So this is November 2018. From here you can start your study. Just click here. Then bring your candles back. Okay. And then you have to decide which study you want to conduct, whether you want to check only with TRT, or you want to check TRT plus bands, or you want to add everything TRT plus bands plus PFI, and then add that indicator. So we'll study about TRT plus band. Now simple rule, whenever color changes to green and momentum band is also present for bullish side, purple color, and bearish momentum band is broken, okay, only then we are going to buy. And if the PFI numbers are very high for bulls, then we will hold on for bigger targets, or otherwise we'll exit for small target. So we have checked PFI here. PFI has increased for bullish side, but TRT is red. Somebody has unmuted. Can you mute yourself, please? So this way, now at this location, what do you see is bias is bearish, and it has been down for many candles. It has been falling since so many days. Would you take a fresh selling opportunity here when the trend is down and it has been falling since so many days? So if you want to take a trade here, is the force favorable? Is the bias favorable? Is the trend favorable? Here we have trend favorable. Trend was down. Color is still red. bias is favorable, bias is bearish, and we are in the selling area. So if we sell here, stop loss will be candle close above this. That means color will change to green, and uh, we can expect first target here. But how many things are favorable for bulls? So bias is favorable, trend is favorable, but latest force, which is visible with PFI, it is not at all favorable. There is very high PFI here. Two back to back strong buying candles are visible. So I have seen many times that whenever this thing happens, then these kind of trades fail. Okay. So I will be very reluctant to sell short, but it's possible that it may fall. I don't know what has happened. Okay. So you have to decide at this time that, okay, I am willing to take a risk because my risk is very small now. If I sell at this location, it is close of the candle. So tomorrow morning at open, if candle opens below this, I will sell and I will keep a closing basis stop loss above this. So this is my setup, and I will expect prices to fall down at least up to the lowest close, up to 64 or something like that. Okay. So this way you can decide, and this will be your live study, that this is how I will analyze the live market and I will make decision. When you take this kind of decisions based on bar replay, you are likely to follow same decisions when the markets are live. Now you have decided to sell. What happened next? Market open gap down, so it will be selling opportunity. We will sell one lot. Here you can also take this kind of paper trade here and easily identify how many times you were successful, how many times you were failed. Okay, now prices are still moving down, slightly down, went up again, again down. So the stop is not hit, the target is not hit, and there is no change. You have to just keep waiting. You are not going to do anything because there is nothing against you, nothing in your favor. Now here price went up above but did not close above, and stop loss is on closing basis. If you keep a stop loss on crossing basis, then your stop is hit. If you keep a stop loss on closing basis, you will exit only when candle color changes to green. So there is one concept called as time stop also. If the trade does not move in your favor, you can exit it. That can also be used to exit the trade, but right now it has not hit your stop loss, and this is happening because there is a very strong bullish force here. Now prices are moving down and new selling area has formed, and as I said that sometimes they work because the trend and momentum is favorable, sometimes they don't work. Now prices have gone down nicely. What I would do is I would like to lock some profit. So how will I lock some profit? Either I will exit if price closes above this purple band. So if it closes above this purple band, I will exit half position so that I have booked some profit. And even if the stop is hit, then I will not make any loss. This way, I will decide what to do. And this candle has hit my stop loss. Partial profit. See, this is green candle. It has closed above this band. So I will do partial profit booking. I will do partial exit. We have taken only one lot, so it or one share, so it will not be possible to exit partial. And then let's just check what happened afterwards. So it kept falling. As we did only partial profit booking, we are still holding, and now the zone has formed. Now, if price closes above this, it will become green. So if price goes above this, then it will become green. So I will take a decision to exit remaining position. Now just wait and watch what happens. We can see. And my target is the lowest close around this area. So around 64 is my target. If it reaches there, I will exit. Yes, so it has reached the target and we can just close the trade. Close position, close. So this trade we took entry here and exit was here, either here or in this candle. Okay, so it took so many days. You can note that let me check the days from here to here, this candle. There were 103 days or 70 candles. So to take a trade, you would have to wait for 70 candles or 103 days. So if you want to do prospective study like this and build your conviction, what will happen? You will not be able to get adequate number of trades in shorter duration of time. How much time we have spent here? It is almost 5 minutes at the most, and in 5 minutes we have covered data of around 100 days or 70 candles. So 70 days analysis or 70 candles analysis is covered within 5 to 10 minutes. So 70 days experience has been gained only with 5-minute bar replay study. And you could also see that once it hit the stop loss, but your stop loss is on closing basis, therefore you did not exit. Then there was this candle closing above the bar, above the bias. So you did partial exit, and then final exit happened here. So this way you can refine your strategies based on these kind of study, bar replay study. This will not make you lose any amount of money, and as the money is not involved, emotions are there are no emotions involved. So if you build your method based on charts without involvement of money, without emotions, what will happen? The muscle memory will develop. And when you actually deploy your money, start with smaller amount. If you are able to take risk of 10,000, instead of just initially take risk of 500 or 1,000 rupees. So in risk of 10,000, you can take 10 trades. And when you have good trades or good tools which give you ready-made analysis, then it's very less likely that you will make bad decisions in all 10 of the 10 trades. So once you take 10 trades, 20 trades, 30 trades, 50 trades, your experience will increase, your confidence will increase, and you will have more conviction. So first do bar replay and study 21 trades, understand what was your thought process and how the trade progressed. Here I thought that the force is very strong, but the momentum and trend are down. So let's take a chance, and we took a trade and kept our stop loss above this. What happened? At this time, I was willing to lose the money, that even if it hits my stop loss, it's okay. But the stop loss is very small and we got a big risk reward. So one thing is not favorable, two things are favorable out of three. Whenever three things are favorable, it's a triple confluence. But if two things are favorable, it's still a good trade. Especially if you understand the Wyckofian schematic, there is nothing green till now. So after first green also it has chances of failure. The second green is the location where we look for good opportunities. Here, bullish momentum is not very strong, and bullish bias is totally absent. So bias is bearish, trend is down. It has given you target. So this way, if you study, your conviction will increase that when trend is down and bias is down, you should not buy. Wait for retracement entries at if you want to buy, but don't buy on breakout thinking that this has gone up strongly and it will continue moving like this. So you will at least avoid this kind of bad trade, that you will not buy in this breakout and you will not get stuck. If you buy here, what will happen? You will exit below this. When the prices are falling, you will just exit when price goes below this, and then prices are likely to reverse. So have you understood the concept of bar replay? Any questions in this?
So this
But I think
bias
it is-
band coincides with the TRT color.
No, no, no. See here, the TRT color is green, but the bands are red.
Okay. Okay. So you took, how did you take the short trade over here when there was very strong, where there were very strong up candles? Yes.
Yes, so there were very strong up candles. Just a minute, please. Yes, so as I explained that there is very strong candle and very PFI is 2 times, and the trend is still down. Trend is not up, trend is still down, and bias is also down. So why I took it? Because I have noticed multiple times that whenever there is a bearish band present, bias is bearish, trend is down, and this is not even uptrend. It is just a red up move. Prices
Okay.
are going up with red candle. So TRT is red, trend is down. What is happening here? It may be phase A, right? Selling climax, automatic rally. So from here also, if it does not close above, then what is likely? It will fall down. And if it closes above, even after that, it will fall down. Why will it fall down? Because the bias is down and it will be first time green. So when there is first time green, I have mentioned this multiple times, I expect 60-70% retracement. So if
Bias.
this is a first up move, I expect retracement. Even if it turns green, I would have exited if it turns green. But my thought process is that it is likely to come down because this is a first move, first up move. So it is likely to come down.
Okay. So in this, the bias takes precedence over the PFI whenever there is initial side movements.
Yes. So initially, what happens whenever there is first up move, we expect retracement. And even after this strong up move, it could not close above the zone. If you notice, there is a starting zone also here, the gray color zone. Yeah, so there is a gray color zone, there is a starting point and reversal point, both are there. And notice this, we have taken short trade in this candle, 25th October. Before that, 1, 2, 3, 4, 5, 6, 7. There were 7 attempts, but it could not close above this zone.
Okay.
Right? And it went sideways for few more days and then it fell down. Just a minute.
Does
Okay,
the
so
distance between the momentum band and the price, does it have any consideration?
momentum band, this is momentum band.
And the price, yeah. So further it
So
is the thing
I have
something.
not studied this. I have not studied this.
Okay.
So it is for mean reversion kind of thing. What we expect is, as it has gone up too far away from this for first time, it is likely to come back. That is a pullback. A pullback is likely.
So what is this
Basically,
bias
if we
band?
understand the market conditions, this is still a downtrend and first time it is going up. So if even if it turns green, our setup is to buy on retracement, right? So we expect even after this up move, we expect retracement. It will fall down by 60 to 70%. Even if the color changes to green color, it is likely to fall down because prices cannot reverse immediately in straight vertical manner. They are likely to come down, then go sideways, and then go up. So there is markdown phase, then accumulation phase, and then a markup phase starts, right? So that is what we expect as a Wyckoff schematic. And if it fails, that is okay. That's why we have a stop loss. Now, suppose if we take this trade in real, the stop loss is how much? Let me count the points. From here to here, it is around 3.6. So 4.36%. And instead of 4.36%, it may go up to 6-7% also and hit our stop loss, right? So sometimes it may go up to 8% also. What will happen? At the most, instead of losing 4%, we will lose 8%. But suppose we have taken a risk of 10,000 rupees. What will happen? Instead of making a profit, we'll lose 10,000 rupees or maybe 15, 16,000, at the most 20,000. Normally, what I do is, if I have taken a trade with a stop loss on closing basis, I decide that if I have a risk of 10,000 and I'm waiting for closing basis, then I will keep a hard stop that instead of 10,000, if my loss is 15,000, either I will exit half quantity or I will exit full quantity at my hard stop instead of waiting for full day. So sometimes some candles may form in a big manner, and in those cases only the hard stop can save, right? So that is how we decide the position size. We are going to have a good session on position sizing separately, but this is the reason we must have a stop loss. Sometimes candle may close up and it may go up to this and then fall, but by that time it will give big loss, and it may continue up also. It's not necessary that it will always come down. So whenever we have a stop loss, just respect that and keep the loss small. So if I decided that my loss is going to be 10,000, it will not be beyond that. And how much it fell down? Our target was here and it's around 17. So 4 times reward. So even if I lose 2 times as compared to what I initially decided, even if I lose 2 times, still it is a good trade, because if I'm risking 20,000, still I will be booking 40,000 profit, right? Any confusion in this?
Yeah, just one query, like you're entering in the trade in month of October, November,
Yes.
and you're exiting in February 19, right? Then
Yeah, so this
this
is
is
just
loss, right?
what?
This will
Loss?
be the loss, right?
No, no. Actually, we have taken a short entry here. We have sold and we are booking profit here. So I should have taken a long position example, but we have taken a short position example. Now let me explain long and short. What is meaning of long? Suppose, yes, here. Now we have a green color here, right? Green color here. Our entry will be on retracement. Suppose we buy here on retracement. Stop loss is below this, or else there is green color here and a retracement, and we get opportunity to buy somewhere here, or there are momentum signals and we buy somewhere here. Okay, so this is our entry, and when we exit will be when the color changes to red and candles close below uh, all the bands, either here or in this location where prices are closing below all the bands and color is yellow. So either we will be exiting here or here. How much is this? Around 117, and our entry is around 68. So almost 100% move. So there is a profit of 100% here. But this is how we take investments, or how you take a bullish trade or long trade. When we buy first and sell later, it is called as long position or a bullish trade, or uh, it's normal investment kind of thing. But in share markets, it's also possible to sell short first and then buy later on. Like here, if you notice the bar replay, there was a profit seen here. It was around 18 points or something. And you can also notice there were some sell signals here. So one could have seen this sell signal, and this is short entry, but this is green color. Now this is again red color, and then there are multiple short signals. So if you take any of these trades, like sell at 116 and exit at 83, are you making loss or you're making profit? If you sell at higher level and buy later at lower level, this is profit. This is possible when we take a trade in futures or options. Okay, but in shares, it's not possible to sell positionally. So you can sell in futures or you can trade with options
Okay.
to
This is
take
for
shorting
FNO.
opportunity first. Yes, FNO. This is possible in cash only for intraday purpose, not for positional. So this is FNO kind of thing where we sell first and then buy later on. Yes, Ashish sir, you have a question?
Hello,
Yes, Ashish sir.
am I audible?
Yes, you are audible.
Sir, I'm actually confused. Means first time red and first time green.
Okay.
In sideways market, there are
Yes.
multiple first time red, first time green. What
Yes.
to do in that scenario?
Yes. So that's why we have to do the bar replace study, and that is the exact reason why I have built TRT and PFI and DDT bands, smart bands. Now, if you see, this is first time green.
Yes.
Yes, this is first time green. Now, if you buy here and book your profit here, it's a successful trade. But if you notice that it has not gone into uptrend, it failed. Why it failed? Because you can notice there is a bearish bias still present. So
Okay.
the first rule I have created is when the bias is not favorable and the momentum band is also not favorable. There is one rule if you read the rules for triple confluence. The momentum band must be broken. If it is bearish band, it must be broken at least once. So notice here, it is continuously black. Here it went up but did not get broken. Where is it broken? It got broken here for the first time.
Mm.
So before that, I will not buy. This is to rule out these kind of bad trades. Then it is continuously below the red bias band. So as it is below the red bias band, that means bias is bearish. We are not going to get big rewards.
Mm.
And the PFI. How is PFI? If we notice, there is strong downward PFI, very strong downward PFI. This is 2 times, this is 5 times. And as compared to these PFI numbers, when the prices are going higher, this is 1239. This is 511. You notice here, it is 235. As compared to
Mm.
1200, 235. Is it strongly bullish?
Mm.
It's very weak. This is
Yes.
green color. So this is
Mm.
green color, but there are no PFI numbers. Bullish
Yes, sir.
PFIs are absent.
Yeah.
So there is no bullish force. Bias is absent. This is just first time green, so it failed. So we will avoid this kind of trade. Now there is
Mm.
a moment PFI number has increased, but bias and trend both are down. So we don't have a trade. Trade happens only when color changes to green. Okay, but after that we have to add these two things. Is the bearish momentum present and is it continuous? Is there presence of bullish momentum or not? If bullish momentum is present, then we can look for buying opportunity when TRT is green. And if PFI numbers have also increased, then we get a chance that possibly the stock may start moving higher and we may get a good trade. Okay.
But many times when we see there is bullish momentum, but bearish band is also present.
So that's why if you do bar replace study, you will notice that this is the time when the I tried to take a trade, but there was a bearish band. So what happened after that? And sometimes there was no bearish band. What happened after that? You can modify your rules. In this example, here there was a bearish momentum. It got
Yeah.
broken here, right?
Mm.
Price went up, gave 50% retracement, more than 50% also. Let's
Mm.
check from this low up to this. See exactly 60% retracement and it completed first target. Now, are all the rules fulfilled here? So this is bearish momentum. It got broken. So momentum on downside broken. Price went above bias band. So bullish, bearish bias was also broken. Now PIT color changed to green. Trend is up
Yeah.
and very high PFI numbers in background. So is there a
Mm.
triple confluence? Yes, there
Yes.
is a triple confluence. Did this trade give a target? Yes, it gave a target.
Yes.
So this is successful trade. This way you have to do bar replay and study. Are there all things favorable for you or not favorable, and then decide. So when you study 20 charts, 40 charts, 100 charts, then your confusion will become less and less. And there will be at least 20, 30%, 40% failure rates also. But if you are getting, suppose, 3 times, 4 times reward, then even 50% success rate is very good reward. And you will notice that some trades like this Nifty 1 minute chart trade, what happened in this trade? See, price went up, came in the buying area, it gave a retracement entry, nice retracement entry happened here. Before this, price had gone above this bearish bias. The bearish momentum got broken here, right? So at this location, bearish momentum is not broken, but next time it is broken. It gave a retracement entry. It could not go below. It gave entry. If you buy here and keep your stop loss below this zone itself, it is just 5 points, 6 points stop loss. If you keep your stop loss below this, because there are two zones below each other, it is 21, 22 point stop loss. And how much it has gone up? 170 points. So 7 to 8 times reward. So there will be some trades like this which will give huge profits, and that will be at least 7 to 8 times of your risk taken. So even if you lose 4 trades, just one trade can cover for all those trades. And there will be some trades which will give 20 times, 30 times also.
So, can we conclude that first we see the TRT color? If it
Yes.
is green, if we want to go long, if it is green, then only we can go long.
Yes. Yes.
If it is red, and though it is in original, means the starting, though it is at the starting point,
Buying
or
area.
so we won't take the trade.
Yes,
If the
exactly.
bias and the momentum and PFI is not favoring, we won't take the trade if TRT is red.
Yes. So suppose this is a fall and price has come to some buying area from the past.
Yes.
There may be some buying area here, but the trend is down. I will not buy here, and I will show the reason. Okay. So I have just completed one indicator today. And I think it's not visible here. I will have to refresh.
But sir, I want to ask one thing. Means, if we follow this rule, we are missing many trades when the good stock is falling and it comes to its original buy zone. We can take
Yes, I
long
understand.
entry. We can take long entry with a very small stop loss.
Yes, and those kind of trades fail multiple times. So you can do bar replay study, and you can see if that is your favorite study, means favorite setup. You can do that.
You know, but sometimes means very good stocks, they fall like anything and they come to their very primitive buying zone, original buying
You are
zone.
trying to capture the bottom.
Yeah. So
You are still in that zone that you want to buy at the bottom.
shouldn't we try to catch the bottom of good stocks?
See, even if you buy here, do you know how much is the stop loss?
No,
Do you know
if
how
the
much quantity you will buy?
no, if zone is marked, then I know the stop
Just
loss.
just a minute, just a minute. Let me get that TRT, best TRT. I have just made that. I will show it to you. Just a minute.
Sir, and all the candles do not show the PFI numbers. So when do they show the PFI numbers?
There is specific thing which happens, only then the number will come. I'll
Mhm.
explain it when we are discussing PFI.
Okay. And there are some down red arrows. What do
Yes,
they
all those
signify?
things will be described.
Okay.
Those things will be described. Where is my new indicator? I'm not getting it. It took me more than 6 months to build that. Okay, no worries. I will search for it. So, can you tell some name of the favorite stock which you are saying that I should have bought it at the bottom? We should look for buying at the bottom.
Like Trent.
Trend. Okay, trend. Now see. This must be some buying area. Let me add multiple buying areas. I think my chart is not
Chart is
visible.
not-
Just a minute. Yes, yes, just a minute. Trend. Okay. Okay. Yes. And this is chart of trend. This is some buying area from the past, right?
Yeah.
Is this a value area for you?
Yeah, actually I bought here.
Yes.
I booked very good profit in 1 month.
Yes.
And then I exited actually. Then didn't took the entry, but now I am willing to buy.
Yeah. So this is called as contrarian entry. So
Yeah.
we are going to discuss one setup for contrarian entry. And if you are very much confident of that, then you can take those kind of contrarian entries. What
Because
I prefer
Trent is a
is
very good company. It is a very good means management.
there are many companies which are very good, but the prices may not follow the company fundamentals. Sometimes there are no willing buyers and people get stuck. So you are fortunate that you exited here in very good profit and it did not keep lingering there or did not fall. It happens something like this. It fell down, you may have bought or someone else may buy, and it goes slowly and then it falls rapidly and then it may fall and keep falling continuously. If this turns out to be a distribution, it may keep falling continuously. So in that case, people get stuck because of this, because they think that company is very good, so they will not exit even when the price closes below buying area. So
No,
when you see
see
multiple,
now there is a buying area. It is very near to the stop loss. Means if I
so
take
I
entry,
have done this mistake multiple times. What I used to do, this is a buying area, I will buy here, my stop loss is here. So I will calculate the position size, I will take a risk of 1000 rupees, I will buy it. And it went up slightly, could not give me profit, then it came down and it is in still in the buying area and near the stop loss. So stop loss is very small. Oh my god, I should buy here. What I would do, I would take 4 or 5 times quantity as compared to this quantity, because the stop loss is now smaller. So here my risk was 1000. Now again I have taken risk of 1000. Initially I decided my risk is just 1000. What happened next? It fell down rapidly. And instead of losing 1000, I lost 4, 5000, 6000. So
mm,
this has happened multiple times with me. That's why I have stopped doing this.
Sir
Instead
Prashant
of
sir,
this, yes, yes,
I'm audible. Sir Ashish sir,
yes.
yes, you are audible.
so both of you, I'm addressing both of you. I've done, I mean, as Prashant sir was saying, I've done this mistake also. Trent, I've made lot of money when this up move was there, and then I've
Mm.
made equivalent loss also when it came down. Same with the Tata Motors. And don't please fall in love with individual stock. Even I thought it is same. SBI also same. SBI also I made money when it was going up, and then it was for very long time it was sideways. And
Yes.
then now when
So
it goes
don't fall in love with the company. Just
Yes, yes,
understand
yes.
that if you are stuck with a company, then you are gone. Then you will
then
not
Yeah.
get new company, which is the Trent was initially not very well known company, and from 1300 it went up to see how much 7000. Okay,
that
you
is
will
what
not
I'm
get
saying, sir.
any companies like this afterwards. So if you get stuck with this, you will not know which next company can give you this kind of reward. So
Same
what I
here.
prefer is instead of buying at this location where it is around 1100 rupees, I would buy at this location where I know that prices are already moving favorably. The bearish momentum is broken, the bullish momentum is coming now, and the trend has turned up, and the bias is also broken. Bearish bias is also broken. So most of the things are favorable for me. And after this, if I take a risk here, there are better chances of having success and lower probability of getting stuck in this stock. Okay. So if I buy here, my stop loss is also small and it gave me profit in lesser duration. If you keep buying when the stocks are falling, see what can happen. It is falling and you feel that this is a good stock and you should buy. Fortunately, it came down, went up, again came down, but did not fall and went up. So you can make profit. But this does not happen every time. And then you may keep hitting stop losses multiple times. And when you are holding this trade, you will not be able to take any other trade because if this is in loss, you should not take other trade. If you take 4 or 5 trades like this, when they are falling, it's good area, I will buy, it's a good company. But markets are bad. What will happen? All those 5 trades will hit the stop loss at same time. And then you will say, अरे इतना बड़ा loss हो गया मैं करूँ कि नहीं करूँ क्या करूँ. So basically follow one method. If you are willing for this method to buy on dips in good buying zones and keep stop loss below that, you have to do your study, you have to understand your mindset and take those trades. But I have come out of that. I don't want to discuss that anymore, and I don't want to keep taking those kind of trades or advising those kind of trades. It's always better to identify stocks which are in uptrend, which are giving us momentum, because normally what happens, as soon as it starts going up, you will see multiple sell zones and you will look for booking profits. अरे यहाँ पे लिया था कर डालूं क्या book, कर डालूं क्या book. Then you will miss whole move. This move will not come because you are of the mindset I'll buy at the bottom. It does not come down, you will not get entry. Okay, Ashish sir?
No, so we can conclude this discussion by means if you want to go long, the TRT color should be green only.
Yes, that is my preferred thing. If the TRT is not green, I will not buy. As simple as that. And if I buy, then it will be for small target,
Even though it is in
for big
the
targets.
original buying zone.
There will be multiple buying zones, there will be multiple selling zones. Now, when this uptrend started, there were many selling zones, all got broken. And when this started down, moving down, there were multiple buying zones, all got broken. Now, let's check chart of SBI. SBI is a good company, right? So when
Yes.
there was a downtrend, it must have broken so many good buying zones. How will you know that which one is the real buying zone? We can't say, right? So from here, see, prices started falling. There is one buying zone here. It will be printed here. You may buy that at that location and it fell down. Again, it kept falling. It's visible here that it has reversed from this some original starting point. So if at all I want to take this kind of trade, I will take only in gray area, this gray buying
Yes, that's
starting
what
point.
I was asking. If it comes in gray area, then
So if
can we?
it is low conviction trade, sometimes it reverses, sometimes it does not.
But
You have
if
to
it
do your
reverses,
study.
it gives very good risk reward.
So you have to do your study. You have to check at least 20 charts, 50 charts. Out of those 50 charts, how many times it gave you very good risk reward? Because I have
Okay.
noticed that these kind of trades may give 1:1, 1:2 most of the times. but they will not give 1:15 times, 1:10 times most of the times. Whereas when the stock is already in good momentum, it can give you 1:5, 1:10, 1:20 very easily and in a shorter duration of time. See, this is very big buying zone, a big starting area. And if you buy there, here the color is red, you buy there. It has not given even 1:1. Again, it came down to same area. Again, it came down to same area. It has wasted so much of time, 3 months. And within 3 months, if you take this kind of trade, in just 1 month, you can make very big profit and move to next stock. That is possible. That's why I don't like these kind of trades where the momentum is lacking, because sometimes it reverses, sometimes it doesn't.
Okay.
Okay, any other questions? Somebody was asking some.
Can you, sir, check Apollo Hospital? Means I have
We'll
taken
check it later. Let me, because today's session is not for analysis, it's
Okay,
for some
okay.
questions.
Sir, one more question from my side. So what is this
Yes.
bias band you said, bias band? Sir,
Yeah.
I don't want, minute details, but at least a rough idea what it is.
Yes, yes. So when you notice this green thick color band, this is a bias band. If prices are above that, then we expect that prices will remain above that and prices are likely to go up. The trend, if the color is also green like this and the prices are above bias band, and especially if it is thick, that means it is rising up. That means we can expect only bullish moves or we should go for bullish moves.
So
If
the
the band
thickness
is
also,
like this.
thickness also matters, is it?
Yes, yes, yes.
Sir, but what is the, any rough idea, criteria? What is bias band means? It's above swing high or swing low, something of that sort?
So I have used the concept of hidden gaps for this. If there are 6 hidden gaps, then it will start printing and then it will show. So if there is a strong bearish momentum, then only bearish bias band will appear. If there is strong bullish momentum, then only bullish band will appear. And when there is a, when the both bands are present, then it is slightly confusing area. At that
Yes.
time we have to look for other things. So here green bias band has started appearing, TRT color changed to green, and the PFI numbers 2 times rise. So this is like a triple confluence. Green color has appeared here. So even though it is first time green, what happened? PFI is increasing and bias is bullish. Momentum band has started appearing. Bearish momentum has disappeared. Most of the things are favorable. What happened? Price went up, came down, gave retracement. How much is the retracement? Approximately 70%, I guess. See, exact 75%, it touched 75%, completed the target. So this way you have to understand how many times if you use triple confluence, you get a good trade with complete target. How many times you take a trade when the stock is in some reversal area and it's falling, and then you take a trade, how many times it wasted lot of time, how many times it gave target immediately. So these kind of studies are required and you have to do these studies using bar replay. Don't just check that this was a good area of reversal and it went into buying area and then immediately it gave target. First decide your rule and see how many times it has fulfilled the rule.
I think we need some more sessions on these indicators, indicators.
Yes, yes, we are going to have those sessions. Today's session is only for describing bar replay, how to study these indicators using bar replay.
Okay, fine, sir. Thank you so much.
Yes, yes.
In this
So,
chart, this bias band, like if
yes,
I observe between May and June, it is red color bias band and also
a
green.
green color.
Yeah. So how to read? Which one to?
Yeah, so this is there is no clear bias right now.
Sideways.
Yeah, it's sideways bias.
Okay.
So, as I had described, there is accumulation, there is reaccumulation, first base, second base. So this is kind of first base. This area is kind of first base. This area is kind of second base. And after that, there is a breakout with high PFI number. And then uptrend started. So it went into markup phase.
Okay.
Okay. So there are some questions written. Let me check. I have opened my TradingView account. How do I add indicators? I have shown it how to add. Checking your data for Nifty. In today's chart, candles were green, then became red, and then became green last around 3 p.m. What did it take the chart to become green after red till 3 p.m.? I what happened, what not, it's not important. What is important is, do we get a setup? Is there any tradable thing which we can use? So what happened here? It turned green and turned red. Bias was bearish all the time when it was green, and mostly PFI numbers were not strong. So buy side there were multiple PFIs, but must be very small numbers. Yeah, the 2 times rise has not happened here. Then there is 5 times rise in falling PFI. Then here for first time we get increase in buying PFI. Again there is downward PFI also, but other things are favorable. Bullish momentum has started. Bearish momentum has broken for first time after so many down candles. And if we notice, it has high PFI here, but went up and again came down very slowly. So the downward PFI disappeared and then this up move started. And when we use TRT plus band, there are no sell signals here. Okay. So what happened, what not, it's not possible to understand every time. But what does chart suggest? The bearish momentum was present here. It got broken here. Bullish momentum is continuously present. And prices went above bearish bias band. So most of the things were favorable for up move. One could have taken this trade and it could have given good profits. And if it hits the stop loss, that is fine. We have to accept the losses. Okay. Then
What I found was that with Nifty and all, when one buying area has formed a new buying area, and then a second one formed, then the chances of uh, progressive rise in the prices is quite high till the prices touch this overlying selling area.
yes. So if you just check Nifty every day, you will be able to understand how it moves and you can take good trades using that. But if you suppose check Nifty one day, then you check Reliance next day, then check Infi, then check ITC, then check some other stock, then check Asian Paint, because someday some other stock is moving, then you will not understand anything. We'll just keep randomly checking the chart. Then after end of the market, you will see that this stock has gone up so much and there was a setup like this or that. In last 6 months, I have traded only Nifty. I have been taking only Nifty trades intraday. I'm not doing anything else. So now most of the times I am able to understand that now is the time that I should take the trade, because we understand the pulse. Like if you just check shoulder patients, you are able to diagnose all the conditions within few minutes. But if you are checking all the kinds of patients, then it takes lot of time. If you are doing only shoulder surgeries or only knee surgeries, you can do better job than anyone else and you can finish the surgeries in half the time than others. So this way, this is same for stocks. If you are checking just one or two charts and doing it regularly, you will understand that stock like your back of your hand and will be able to take better trades with that. Okay.
Could you observe similar thing with more than one buying area being formed is a favorable point or something like that?
So mostly whenever second time green color appears, or when the 1 minute and 3 minute both are favorable, or if there is support from higher time frame for 1 minute time frame, then that trade works better. That is my observation.
Yes, sir. Okay.
Yeah. So Black Friday offer is coming next week. Yes. So Black Friday time, that is the time when they give very good offers, and sometimes there is 70% discount also. MRPL, it's 1 minute chart, sir. You have 1 minute chart. Muthoot Finance, we'll check it later. And can you explain stop loss? So we discussed a few things about stop loss, and there are two types of stop losses which I use. One is on crossing basis, other is on closing basis. So if I'm using this zone as my buying area, I'll use closing basis stop loss. If candle closes below the zone, only then I will exit it, and otherwise I will keep holding. And crossing basis stop losses, I will use slightly wider stop loss based on zone. If it is a 10-point zone, I will use 15-point stop loss. If price moves more than 15 points, I have to limit my losses and I will exit. Okay, but we'll discuss this later on. Bar replay is and stop loss. Okay, kindly ensure what does interpretation means in the bottom. That we are going to discuss during course session on Sundays. How we can get access back for indicators. So I have shared in the group. You can open Alice Blue account and share a video, and you will get access for 1 month. And later on, you can purchase the subscription. There are multiple options: monthly, quarterly, yearly, or lifetime. Then how to get data band? Yes, this is very important question. How to get data band in 1 minute chart? We can only see 3 minutes onwards. And this is happening because what happens is I have used multi-time frame analysis for this. I will show it once. When we use band, this is the bands indicator, and you can see there are two bands visible. But if I use basic version, then two bands will not come if I'm using 1 minute chart, because for 1 minute chart it is using 15 seconds. So if you use this, what happens is 1 minute chart and 1 minute data, it will show only two bands. See this, both bands have merged. Instead of four, now there are only two. So if it is paid version, then you should not use 1 minute chart. If you are taking intraday trades, then you can take a paid subscription of TradingView. Okay, and it will cost you less than one trade's loss if you are taking intraday trades with good quantity. So if I use this, then it shows two bands. Or else, if I use this, what I will do is I will use 15-second time frame. So 15-second time frame may not be available in those unpaid subscriptions. Therefore, it will show as only one band. But after 3 minutes, it will show two bands. Because for 3 minutes, lower time frame used is 1 minute. So it will show two bands. So that's your answer. How to get banned? Asian Paint screen not visible, 5 star. I'm not able to assess. And don't catch falling knife is why number 6 for gaps. Yeah, I have observed that it's a good number, and I got good setup based on that. I have set it for 6. I have tried multiple. I have tried 3, 4, 5, 7, 8, 10. So we have to keep one number. There is no specific reason. I felt that it has a better correlation. Therefore, I use 6. But I have kept it variable. You can change the setting from here, and if you can test yourself. How to select time frame? So if you are taking trades, if you are busy professional and not able to check the charts during daytime, either take daily chart or weekly chart and take trades based on that. That will be the best. But if you are active, then you can select lower time frames. That's how I select the time frame. And if the stock is highly liquid, then we can go for 3 or 5 minute charts. But those stocks which are low liquidity stocks, then always go for daily or weekly charts. And those which have intermediate, maybe you can use hourly chart. And that is how we can select the time frame. One more bar replay chart. Okay, bar replay chart. Now it's already 11 past 11. So we'll end the session here. No more bar replay. High liquid means, see, I will show you. If I go to some stock like Reliance and check 3 minute chart, what is it showing? It's showing normal chart, right? It looks almost normal. We don't understand whether it is, if we hide the time frame, we don't know whether it is 1 minute, 3 minute, or 5 minute chart. Even on 1 minute, it will look uniform. There will be good up and down moves without any gaps. But some other stocks like maybe ABB or best is MRF. What do we see? This looks like a very bad chart. So this is how low liquidity stocks will look. Some candles will be very big, some candles will be just dash. These are low liquid stocks. On 3 minute also, this is not a good chart. 5 minute also, it's not good chart. 15 minutes, it's okay chart. So 75 minute, it looks fine. It is better. So this is how we can easily identify what is low liquid stock, which is high liquid stock. Some other stocks like KIOCL maybe. On 75 minute, it looks good. 15 minutes, see, it's not looking very good. So there are very big wicks. The candles are very compressed and at some locations, very big at some other locations. So this is how we can easily identify good and bad liquid stocks. So if the stock looks very good, normal stock on the selected time frame, that means it is liquid stock for that time frame. And that is simple definition which you can use. Okay. 6 hidden gaps in intraday difficult. No, it's not difficult. As you said, you are trading Nifty for last 6 months. Can you explain any indication how it works? And I mean, Wyckoff-Hen theory applies to it. Daily zone, markdown, accumulation, markup, distribution. Do these patterns follow? So I will explain this later on because we don't have a time now. Alternative time frame for 75. Maybe 1 hour chart can be used, but I don't like it. Why I don't like it? Because in 1 hour chart, the last candle is 15 minutes and it changes a lot of things. You can notice last candle is always a 15-minute candle and it changes the chart completely. See, these are normal candles and this is very small single candle. And when we do volume analysis or other things, these things matter. Therefore, I use 75-minute chart. I don't use 15-minute chart. But you can try with hourly chart. Maybe some stocks will give you good trades on 1 hour chart. Some will give you better trades on 75-minute chart. Only graph decided high, low liquids. So this is how you can easily identify based on graphs. But other thing is I use the concept that if I want to take a position size on 1 minute chart in one click, can I take it? Suppose I want to take a trade with risk of 50,000 rupees. So can I take on 1 minute chart in Nifty? Yes, I can easily take 50,000 rupees risk on 1 minute chart. Can I take same risk of 50,000 rupees using KIOCL chart? No, I cannot because the position size will be very big. I may have to invest maybe 50 lakh rupees or something like that. And if I take one trade worth 50 lakh rupees in KIOCL, it will create a big candle and it may hit my stop loss within few minutes. And then if I exit instead of 50,000, I will lose more than 1 lakh rupees. So if that things are likely to happen, that is low liquid stock. And if you are just willing to buy one share, then even 1 minute chart will be fine for KIOCL. So how much quantity you want to buy, that should be possible on that time frame without big slippage. That is the concept of liquidity for that stock. I hope you understand that. Only graph decided. Okay. Thanks a lot. One last query. Will this course be for indicators only? So in last session and even today, we did not discuss much about indicator. I have told you a very important concept of bar replay, backtesting, how to do bar replay. If you are not using indicators, that is fine. But do bar replay study. You will learn a lot of things. If you have studied how to mark the zones, go in bar replay mode, mark your zones, see how those zones work. Are you getting good trades based on that? If you have used some indicators, you will understand how to take those trades. And we have in first session described about different bases and Minervini concept. We have discussed Wyckofian concept of accumulation, markup, distribution, all those things. So it's not only about indicators, but yes, I am going to teach indicators also, and I am going to tell you the trades based on indicators only, because that is the main thing for me and for my mentorship program group, that they have attended the course and they have indicator access, so they will understand how to use those indicators. Others can join. If they are not interested, they are free to go. Okay, thank you everyone. I will end the session here.
Sir, one more question.
Yes.
Are you going to talk about Wyckofian principle, sir?
Wyckofian principles in details, it takes at least 5 to 8 sessions of 3 hours.
Okay.
That is part of mentorship.
No, but just a brief introduction, maybe.
So we have done that. We have discussed about accumulation, distribution, markup, markdown. And when we discuss about indicators at that time, I will tell how we can understand that whether this is accumulation or distribution. But that will include the use of indicators. That when we see high PFI numbers in trading range on bullish side, that will be indicating towards buying opportunities or a bullish bias or possibility of accumulation. And when prices fall below trading range, like there is some trading range, something like this, there must be a trading range today. Yes. So there is a trading range here, right? So this is a trading range. And what is happening in this trading range? So bullish candles are larger. And when we add PFI, we'll be able to see that there are high PFI numbers. We can see 49, then 7, downside is 6, upside is 6, then down is 4, then 2, then there is 3.34 which is breaking down but lack of follow through, and then again it went up. So there is not a very strong selling going on. We can see larger bullish candles and high PFI numbers on bullish side. Especially we have a 49 number here which indicates that there is very strong buying, and a very small number of 3.34 which is trying to break below the range, which is indicative of lack of selling pressure. So these kind of things can be checked, and that can be used for taking trades based on Wyckofian principles of spring and secondary test, and how to use these things that we can discuss, but not the details of phase A, phase B, phase C, spring, secondary test, and upthrust, and all those things. They are not going to be discussed.
Okay, sir.
Yeah.
Okay.
Okay, then. Thank you all. Good night.
Thank you, sir. Good night.